Now, Mike McClurg is a Bloomberg analyst, but he has come out and simply said now that Bitcoin is absolutely worthless.
Bitcoin is money, Bitcoin is digital gold. I'm seeing it shift away from those two narratives. A lot has changed in the last 2 years on what is money.
Right.
And I do believe that stablecoins have taken over. We're starting to see flavors of stablecoins that add a little bit more risk. Blockchain technology is too slow to process AI data.
You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold Debit Card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started. Welcome back to another episode of the XRP Pod. Today is going to be great because I'm going to have Steven McClurg coming on from Canary Capital. And of course, he's been on the show many times, and you guys have had a chance to kind of see what Canary is doing around the XRP ETFs, along with some others out there, including HBAR and others. So we'll talk about that and get into really what is happening in DC, because there is major movement right now in the market. XRP up 40%, guys. I mean, this is unbelievable to see these kinds of returns that are hitting the market right now. Depending on where you were on any of these assets, you have to take a look at, of course, the one that has been leading the market, and that being XRP. There's many reasons why. We'll talk about that. Bitcoin also up, now cracking what could be the 78,000 mark this morning, wicking up to a little bit over 77. So very interesting day for Bitcoin. Ethereum also on the move, which is another one to keep a close eye at, holding at 2383. The $2,400 Ethereum close could be within reach here within the day. So be on the watch for all that good stuff. Let's get into it. I want to bring in Steven. And, one thing about Steven that you guys probably don't know is he has been right on a few of his predictions. So, Steven, how are you, man?
I'm great. How are you, Paul?
I'm good. So you've had a few predictions on the show, pausing on clarity, Bitcoin not making a high in the summer, all the situations that we've kind of seen play out here. And this is something that I want to open up with you on. And that was this statement right here by Mike McClurg. Now, Mike McClurg is a Bloomberg analyst, and he's been in the market for quite some time. In fact, many of the times he has been on several Bitcoin shows, or crypto shows, I should say, not necessarily as the opposite position, because he's kind of been indifferent, but he has come out and simply said now that he is agreeing with Elizabeth Warren, okay, and Ben McKenzie. I don't think I'd put those two people in the same statement, that Bitcoin is absolutely worthless. We talked about this pre-show. You said you had a piece coming out. Tell me your thesis.
So really my thesis is, and you know this, Paul, I've been a big Bitcoin believer for 15 years. Some of that time I was a Bitcoin maxi, but there's areas of the narrative that I don't think are playing out the way that I would have wanted it to. Bitcoin is money, Bitcoin is digital gold. I'm seeing it shift away from those two narratives to more of a Bitcoin is the US Treasury of the crypto universe.
Interesting.
Right? It's a little bit more of a flight to safety. It's a little bit more of a riskless asset or risk-free asset. It's not risk-free, but it is a lot less risky, a lot less volatile than other things. But my disappointment is it hasn't quite played out as money. And a lot has changed in the last 2 years on what is money.
Right.
And I do believe that stablecoins have taken over.
Yeah.
And it just is what it is. It doesn't mean that I hate Bitcoin. I think it's worthless, but it's in a different category than money or digital gold. It's a little bit more like US Treasuries.
We are looking at a $300 billion market cap right now on stablecoins. And this, to many, they believe that this is just a drop in the bucket coming to the market. When you look at the amount of money that's sitting on the sidelines, and we'll talk about the Treasury and how they're backing up some of the bonds here in a little bit, but the amount of money that could be coming off the sidelines, how stable coins, I should say, especially with Tether's new audit, going to play a role in this in terms of the new market around use case?
Look, I think it's going to be massive. And by the way, I don't want it to be that massive. I wanted a decentralized digital currency, but the reality is it's so much easier to transact. We're going to be using it in peer-to-peer transactions. We already have so many great peer-to-peer transaction platforms like Venmo and others,
Right.
and stable coins are becoming the heart of that. Even X is going to start using stable coins for transactions,
Right.
on X, and it's a platform that a lot of people use and it's used globally. So I just think it's going to get massive. It's going to get so much bigger than what it already is, and a lot of that is due to both legislation and action and guidance from regulatory bodies like the CFTC and SEC.
Yeah. Well, and I think this points to the issue around U.S. Treasuries continuing to grow globally. First of all, what was your response when you saw the Tether audit come out by KPMG? Was this a big deal for the market of crypto in general? Did it have any implication, or do you think it has any implication on how stablecoins are going to be used here in the U.S.?
There's always been a lot of doubters on Tether. Well, not always, but for a very long time. And Tether was the original stablecoin. I never was that big of a doubter of Tether. Transparency is good if you're going to be using this thing for transactions. But what I think that audit has done is eliminated some doubters. It hasn't eliminated all the doubters,
right?
But it's eliminated some. And the reality is Tether is the most used global stable coins. We don't use it as much now in the US,
right?
But in Asia, for instance, it's got massive adoption. And some of the protocols that it's transacting on or other protocols that we don't, again, use as much in the US, like Tron.
Right.
But Tron is the biggest transaction engine behind Tether, which also has a lot of doubters in the US. So it's kind of funny how, the Western world and Asia are a little bit at odds on what their preferences are.
Well, I think that, Asia has been kind of on the move for quite some time. It's not as if this was a secret. Tether has been pretty much the cornerstone of crypto, really, outside the United States. And only recently, the last 3 or 4 years, has Circle even really become a player, at least within the U.S. And I think that's my question is, now that they have an audit, you've got Circle, a publicly traded U.S. company. You've got Tether holding more gold than God, I think. And now coming into the U.S., who wins this battle, or do you think this is a two stablecoin race right now for U.S. liquidity?
Look, I think there's room for a lot of different stable coins with a lot of different flavors, just like money market mutual funds and other mutual funds. So I think it's going to look a lot like that. Somebody might want to hold something like Tether that's just or USDC that maybe yields a little bit, has a lot of U.S. Treasuries in it. In some jurisdictions, they can distribute that yield, and some they can't yet, which is why we're waiting on the Clarity Act. But I think that the SEC is going to give guidance that is Clarity Act, in my opinion. I've always said this: it's kind of a nothing burger. Regulatory agencies can simply give guidance and do what we need it to do, just like they did with ETFs in the U.S. But we're starting to see flavors of stable coins that add a little bit more risk. There's a firm called Falcon, for instance, out of the UK and South Africa, that is building a stable coin that's going to, that will likely yield about 9 to 10% with high yield bonds and CLOs. And then you've got everything in between. So some people might want to earn a bigger yield on their, stable coins. and some people want it to be a little bit more stable and pegged to the dollar. So there's going to be a lot of flavors out there. I think there's going to be a dozen of them that win.
So a dozen of those continuing to push into the market liquidity wise. This really gets into an interesting concept of how yields are going to be paid. And of course, that's the big argument that right now still comes into the narrative with both Clarity and also I think the big banks in general. And this was something that was talked about on our show earlier this week, and that is with the amount of pushback that we have seen from major finance, traditional finance. And really, you would only assume that this is just a matter of maybe a delay tactic until they can catch up. How much of an impact do you think TradFi is going to have on traditional crypto that we know today in the next 5 years?
Well, look, every major firm globally and their brother are building stable coins, whether
Yeah.
it's BlackRock, whether it's Korean banks.
Mm-hmm.
Banks around the world are going to want to have their own stable coins that transact on their own platforms, and they're each going to have a slightly different flavor as well. Some of them are going to yield a little bit more and a little bit less, and have a little bit more risk and a little bit less risk. But we'll see which ones really win. But there's a wide opportunity, and a lot of institutional firms are jumping in.
Yeah. All right, so let's talk about one of the announcements. This came over RippleX this week, and this may be something big, and I think a lot of people are in that position right now. You look at institutional grade credit now coming to XRP Ledger. This is Cicada Credit, bringing credit expertise and borrower pipeline. Then you have Clearpool coming in. So you're going to have institutional lending coming to XRPL. We've seen a little bit of this activity, but this really takes it to another level. How much of an impact do you think this is going to have on XRP as a whole, with institutional lending be a potential opportunity here?
Oh, I think it's going to be massive. I've said for a few years now that the winner for financial rails for a protocol is going to be XRP. And some of the complaints about XRP is lack of decentralization. But when you're looking at financial rails that institutions use, they want centralization. They need centralization.
Yeah.
And there's a lot of great protocols out there that are more decentralized, that are going to be probably used a little bit more by retail, that that retail investors prefer the decentralization. But institutional investors are going to prefer more centralized platforms. And with the XRP Ledger having the ability to produce a yield, it's going to attract a lot more capital.
Yeah, well, and maybe in the sense of we could see a capital flow into this that, especially in the early stages, that we haven't seen on some of the other chains, to your point, especially when you look at the financial rails being remapped right now, which kind of brings me to this topic, and that is South Korea. Their market, this is Upbit, seeing trading volume surging 273%. And this is since March on XRP. Again, South Korea, a very big XRP market.
Yes.
So we could understand that. Why do you think we haven't seen that kind of trade volume in other major markets that have XRP really as a premium asset?
Well, it really goes back to the population of South Korea. And if you look at total trade volume and currency pairs, oftentimes the Korean won is a stronger currency pair than even the dollar in crypto. So the US and South Korea are the two biggest markets right now for trading with those two currency pairs. So you're just with that alone, you're going to see the type of volume, across the world of crypto. But I do believe that XRP is going to be probably the more clear winner in protocols in South Korea. Ethereum is huge in Canada and the US, but XRP is the winner in South Korea.
You had XRP up 40% this morning. Right now, kind of leaving ETH and even Bitcoin in the dust. Why do you think we're seeing traders moving into XRP? Did they just say, okay, listen, that $1 floor was really the DCA limit that I missed, or maybe I got it, and they're looking at that specifically? Or do you think there's been a transition in trader mentality on some of these top tokens?
Well, I think it's just coming from, we've been in a bear market for the last 9 months.
Yeah.
By the way, I still think that we're in a bear market in crypto.
So you think this is a short push?
I think it's a short push, but new pricing levels are being achieved.
Okay.
So I don't think we're clearly in a bull market yet. We still have, the month of September is historically a pretty bad month for crypto. We still have midterm elections coming up. So there's still some opportunities for pain. And we probably won't see a clear bull market until after midterms or even into January 2027. It doesn't mean that I think that market's going to pull back, but when we start seeing the parabolic moves that we see in a bull market, it'll probably be a little bit late. I mean, we did see a parabolic move in the last 3 days,
yeah,
but I do think it's going to be pretty short-lived. But with XRP Ledger, there's been a lot of focus and energy in building it out over the last 9 months, and announcements like yield coming to the XRP Ledger, and several other announcements and institutions moving to XRP Ledger is really what's causing this big push.
Well, and this is a push that I think many investors that were holding XRP were a little concerned at around the $2 mark when it first cracked it. Now, XRP just in 3 days has moved up 40%, so we're setting it around $1.40. Yeah. And you look at the amount of interest in crypto now from a possible rotation of capital that could be happening possibly out of the AI space, or if maybe even out of the bond space. Do you think that that is going to be a precursor to a bull market? Because there's always early money coming into these markets, and then you see your bull runs take off from there.
Yeah, this really is early money getting prepared for that bull market, but it's going to take a few months before the rest of the money comes in and the rest of the investors come in. Yeah. But this is an early push. This is and I don't think this rally is going to die and we get a dead cat bounce and things markets come back in again. But we are at new levels. Yeah, and we'll probably sit at this level for a little bit until the real bull market comes.
Stephen, I was looking at and I analyzed a lot of the statements that came out of the crypto summit yesterday or this week, and a couple of key things that Trump, and he always does this. He tries to mention as many people as he can, out of courtesy, but sometimes I just wonder if there's something more. And one of the ones that I was curious about was what's happening with Hyperliquid. Of course, Trump called him out on the podium. Hype surged ridiculously. When you look at Hyperliquid, and now with what Trump said, I don't know if this is to be true, but if SELIC, the CFTC, is trying to onboard or onshore Hyperliquid, how much of an impact do you think that has on traditional finance? Well, if they come into the U.S.
Well, Hyperliquid, I think is a really interesting play right now. Think about who's gotten involved, right? You've got Bob Diamond, who he was the CEO of Barclays, who's extremely involved in Hyperliquid. And, I spoke with him a few months ago about his involvement. We've done some things together in the past, in the TradFi days, but he's a big believer, and he's putting everything into this. So when you have guys like that coming in and getting behind this, I think it's going to look, I think it's going to look very attractive from an institutional perspective. And after XRP, Hype is probably number 2 on the institutional rails.
Hype number 2 on the institutional list, up what looks to be around 30%, on the move right now. Looking at HBAR also continuing its climb. I know you have an ETF with HBAR. Is there anything happening within the HBAR community, and we've got to get the HBAR team back on soon,
Oh yeah.
that can really, are they still building into any kind of news that could be coming out, let's say, before this next real push of a potential bull market comes?
Well,
Anything?
if I knew, I probably wouldn't say it. I have to wait for them to say it. But what I will say is, just like XRP is winning on the institutional finance rails,
Yeah,
HBAR is the clear winner on enterprise data. And when you have enterprise data
yeah,
and AI data coming to a convergence at the level that it is right now, HBAR has probably the biggest chance of winning even in the AI game. So
really?
it
Okay.
is HBAR is my favorite asset out of all of
Period.
crypto. Yes,
I like that. Okay.
because there's no competition.
Well, that's true. That's true. And I think the point behind that you have to look at is how closely and intricately are they tied to where AI is truly growing? And because I think we're going to continue to see a lot of growth in both productivity and also just innovation on AI. The more we talk about this, and we have a whole track where we cover this on the main show, in terms of AI integration. So we get a lot of press releases.
Oh yeah.
And I am seeing more press coming in right now on either new emerging AI projects that are crypto related. And HBAR is always somewhere in the mix of these. So it's interesting to see how much they're talking the track of AI. Is there something that you feel that they're going to be very good at in terms of where AI is heading? Is it going to be on the data layer? Is it going to be something on the execution, the agent side?
Mhm.
What do you think is going to be their strength?
Well, it all has to do with speed. The problem with blockchain technologies and HBAR, even though it's the token is a cryptocurrency, it's not blockchain technology. It's hashgraph technology,
Right.
which means that it can operate at a much faster speed in pulling, collecting, and synthesizing data than any blockchain ever could. There really is no blockchain technology is too slow to process AI data. And
Right.
that's one of the issues that a lot of these, I would say, startup blockchain protocols have with AI,
Mm-hmm.
and that's where HBAR is the clear winner, is that their technology was built 9 years ago,
Yeah.
and it's had all this time to continue to iterate on that technology. So it's there, it's ready, where everything else is still in the very early stages.
So we were doing some research on this around HBAR and XDC, where they broke their all-time daily transaction records.
Mhm.
Hedera, I think, was on August 12th, and then XDC was just prior to that. But Hedera came out, it was almost 350,000 transactions on August 12th. That itself is intriguing to me because it's interesting that it's two enterprise DLTs breaking records just days apart.
Right.
Um, so I just wonder if there's something brewing here that could be big for the HBAR community. Obviously, it's good for the HBAR ETF if there's institutional
Yep.
starting to look at this. But where do you think this is going in terms of these transaction growth numbers?
Well, I think if they can continue to sustain those transactions without any issues and continue to grow,
Mm-hmm.
it is the natural it is the natural place for AI data, and that's really where the biggest growth opportunity is.
Yeah. So okay, all right, I like
Yeah,
that.
and then one more thing, and if you look at the size of the market cap, for instance, for HBAR versus
Yeah.
some other tokens, um, and you look at the volume on ETFs, because I'm looking at volume every day. This is all
Mm-hmm.
public.
Yep.
The volume in HBAR is ridiculous for its market cap.
Yeah, man, I don't know. Something is brewing there. You've got HBAR is going to CBOS again,
Mhm.
um, which is interesting. That's Swift oriented. You consider the transaction growth. I don't know. Something's up. Something's
Something's
up.
brewing.
Something's up, as they say. All right. So I know you guys have a spot ETF when you look at outflows with almost every other, and I think you guys haven't seen outflows. Have you seen the outflows on Hedera? Yeah.
If I remember right, I have not seen outflows on that ETF ever.
So like not even a single week.
No.
Wow. This is interesting. Okay. Well, we gotta dive into a Hedera. We're gonna get the Hedera team on. They're very friendly with the podcast, so we'll get the producers to reach out to them, because we'll see if we can't pin them down for you, Steven, and get something to chew on a little bit here. Let's talk about Mike Selig, because he came in and kind of threw down a little bit of a gauntlet, and he was talking about the issue of if Clarity doesn't go through.
Right.
If Clarity doesn't go through, Chair Selig said the CFTC is going to begin building its own crypto market structure if it fails to pass. You mentioned this early in the podcast, is that you think these regulatory bodies are going to do this anyway.
Yes.
Explain.
Well, what you said is exactly why I'm saying what I'm saying, and also, commissioners of the SEC are saying things similar, right? So there's a big push in this administration to get all the components of Clarity, whether it's through regulatory guidance or through a bill. Look, if the bill passes, that's very symbolic, great, everybody's happy. But if it doesn't, we still will get very, very similar results, which is why I continue to say that Clarity is a nothing burger other than a symbolic stamp from Congress saying that, yeah, we approve this too.
So CFTC comes out on this. Obviously, Selig is very pro-crypto, along with Paul Atkins coming in from the SEC. What did you make of the first round of rules that they came in with here recently? Basically, two stockpiles, a 75 million rule and a 5 million rule. One way you can go kind of unlimited, which is ironically the 5 million route. The other way, you're capped unless you are an accredited investor. What do you think about those rules coming out?
I think that's great guidance. And there needs to be a little bit of leeway when you have a new technology. It shouldn't be, hundreds of millions or billions, but, a very, we had this issue back in 2017 with all these ICOs, and look, a lot of them are junk. I'm just going to say, but some of them were very good protocols, very good technology that would not have been able to be built.
So
had it not have been for that.
I hate to interrupt here, but I'm just saying, do you think, because to me, I maybe we have been in crypto too long because we've seen all the dirt, we've seen all the bad guys.
Yeah.
Do you think that offering that $5 million channel with no recording, I mean, there's no reporting required. It's like a free pass under the SEC guidelines, and there's no real protection of the investors that go in there either. Do you think that is going to draw in the unsightly crowds to try to manipulate that?
Oh, absolutely. There will be unsightly crowds but that happens in every area, right? I mean, there's a lot of startups out there that go out and raise
same
money.
Thing. I get it. Yeah.
Yeah. And it's, and you look, the bad guys will be caught. And, but at the same time, you in my opinion, you do need a little bit of leeway for the good actors to be able to accomplish something.
Well, and I think for an investor today, because of AI, you can actually do due diligence that you couldn't do just 2 years ago. All right.
That's right.
I know that we have a private investment group where we invest in small businesses, and that's exactly what we're doing. And we're finding and uncovering things in our due diligence that I don't think even our attorneys would have uncovered. And we've, of course, amped it up with use of many of the large language models in targeting some of these. So I think that might be a protection layer for at least smart investors to be able to look at some of these projects in a little different light. So maybe there will be some protection as we see this transact in the future. So how big of that is that ruling? Obviously, it was a big deal to the industry because the market is pumping right now based on that a guidance alone. But how big of a deal do you think that has long term in the industry?
The $5 million limit, I don't know if that's going to necessarily help a lot long term, but it will some projects that want to get started that are great projects. Look, 1 out of 100 are going to fail. I mean, sorry, 1 out of 100 are going to make it, and 99 are going to fail anyway. It doesn't mean that they're bad actors. It just means that, hey, we didn't execute well.
It's the same thing in businesses, for sure.
Yeah, same thing in businesses. So giving a little bit of leeway for technology, I think is important as long as it's watched carefully.
Right. Well, we're going to find out quickly. All right. So this was put out in reference to yesterday. The 10-year note was trading at 4.68. And that was when the U.S. Treasury announced it would increase the bond buybacks, $4 billion. All right. Then the yield fell from 6.8 to 6.3. And the Treasury now pledges to provide liquidity support on this. So 24 hours later, now the yield note is above levels at 4.71. So
exactly,
that seems like a futile experiment. And why did that happen?
Well, look, I think the Treasury is working very hard to work to bring rates down right now, because the reality is the higher rates are, the more bonds they're going to have to issue, the more they're going to have to borrow, just to cover interest expense. But we're in a generational bear market in bonds that started in 2016. A lot of people argue with me that it didn't start in 2016; it was much later. But I'm going to say it started in 2016, and we had a hiccup in 2019, 20, and 21. And this generational bear market could last 30 to 35 years, maybe even longer.
Oof. Wow.
And it's going to look a lot like it did in the 1950s when the Fed Treasury Accord ended, and we were in a Cold War. Right now we're in global wars and Cold Wars. So you have to fund military, you have to fund wars. Most central banks, including the U.S., are over-levered, and they have no choice but to continue to issue debt just to pay their bills and make service. So there's a lot of reasons why this bear market will continue to go higher. So it really didn't surprise me that the 10-year popped right back up to 470. In short order, we'll probably be above 5. And in 10 years, we're probably above 8.
So, Steven, wouldn't that take major capital and get it on the side? Wouldn't that basically be pulling liquidity out of the market?
Absolutely.
So how does that play into the productivity angle?
Well, just like, and you look at the 1970s, the last decade before we turned the corner, which was about 1983, you saw hyperinflation, and you saw stagflation.
Yep.
And that is coming. It's not coming tomorrow. It's not coming 5 years from now, but 10 years from now, we'll probably experience another period of time like the 1970s.
So you think this is the early signals of what could be a long-term rolling market into a pretty dire time?
That's right. However, in the short run, and when I say the short run, the next 5 to 10 years, we're going to look a lot like the 1960s, when there was high productivity, high production, and money was still hot, even though interest rates were relatively much higher than they were in the 1940s and the 1950s. So
interesting. Okay.
So that's really the way to think about it. People are we're still in the early days of getting used to higher interest rates. So things are going to, like commercial real estate, residential real estate, is going to hurt for a short period of time. But once people get used to these higher rates, you'll probably start seeing home buying again. You'll probably start seeing commercial buildings being built. You'll probably see an increase in manufacturing. The weighted average cost of capital is going to be much higher, but that just means that the returns on useful capital is going to have to be higher.
Okay, so is there anything that the U.S. government would be able to do? The productivity angle that maybe this next AI era and crypto era bring, whether it's investing or actual productivity and real world, use cases. Is there anything that could be happening in the next few years that could possibly change that potential trajectory?
Yeah, I mean, a few things could be recession. Even though the technical definition of recession is 2 quarters of negative GDP growth, um, the reality is most Americans and most global citizens can't afford things like groceries and mortgages, and uh, even in some of the data that we've seen in the last couple of weeks coming out of Walmart, for instance, Walmart's earnings have dropped significantly, mainly due to pharmaceutical sales, which means that people can't afford drugs right now, and that's going to be the vast majority of people. But we're also at more than full employment in the U.S. So people still have jobs, they still have income. Just things that they're buying are becoming more and more expensive, and they're having to make choices, which isn't great at all. And that eventually will have an effect on consumer spending, consumer confidence, which means that equity markets may not do so great, but certain areas of equities are going to continue to get massive amounts of investments like AI data centers and chips and all these other things that are creating productivity in other areas of the world that we may or may not need. But the reality is we're going to, governments are going to continue to print money and are going to continue to try to win that race. So as long as that's happening, jobs are going to be created and people are going to be out constructing data centers.
Okay, so this is it's going to be like just highs and lows over the night. So it's kind of like you've got a chance here of what could be the next golden age coming at us, but knowing that this train is going to have a problem,
Oh yeah.
in a decade from now. So wow. Okay, well, I'll take that with a grain of salt there on that, and go do some more deep dives on that. Hey, I also want to kind of, before we get out of here, I want to kind of hit on this whole issue. You talked about it earlier, and that is this idea of putting your XRP assets to work. Flare, of course,
Mhm.
launches some of their vaults to enable this, and then there was this news coming out that I thought was interesting, that I just wanted to kind of get your opinion on. Do you think this has much of an impact here? Because ClearStar now is lifting its earn XRP deposits cap to 45 million FXRP on Flare. This is a new, more borrowing venues basically are coming online. So with all of that happening and the potential, because this right now seems like it would, first of all, start to create a huge demand in DeFi utility,
Yes.
and most likely some capital efficiency of XRP. How big of a deal do you think this is?
Well, one of the biggest complaints about XRP for the last few years has been, well, if I own it and I'm a participant in the network, I'm
Yeah,
not getting anything out of that. But now that you're actually able to do that, it's now competitive from a price perspective
yeah.
to something like Ethereum or Solana.
Hmm. Well, and this is going to be, well, this is real yield now, really driven by borrowing demand. So you see that, because that was the original, I think, with Flare. I had Hugo on last week. The initial launch was 5 million, which obviously this move shows that, these underlying strategies are definitely absorbing the capital that's out there, that wants to come in. And then if you look at the possibility, because the lockups and the liquidity mechanics really aren't that big a deal. I think it's like a 72-hour standard unbonding.
Yeah.
So that's quick as well. This could drive a lot of, even more. I'm surprised we haven't seen more from the XR. Maybe it's just not available yet in an easy access point. Do you think that the UX and the ease of use is going to have a big benefit or help on being able to grow this market?
No, I really do. And there's already a very strong XRP community globally. And
Yep.
with announcements like this and ability to earn
Yep.
more on your money, I just think it's going to continue to grow. So that just means more capital coming in. It really is no shocker that XRP has gone up 40% in the last few days.
Yeah.
It wouldn't surprise me if we see another 40% in 2020, early 2027.
So, well, I mean, you got institutional private credit coming in, Clearpool Cicada.
Yeah.
That itself, obviously, Flair's network via Clearstar, that's another one that is going to be piping in. So this all makes me think that you look, Ripple still building institutional liquidity directly on the ledger, like Flare. This all unlocks smart contract capability. And I think for XRP holders, this is a huge, huge win going forward. I just wonder how big this will be. How big is this market 12 months from now?
Man, it wouldn't shock me 12 months from now to see, let's just talk in terms of price, right? It wouldn't shock me that, XRP's above $3, $4 12 months from now.
But as far as the lending market, so sitting on do you think this could be $1 billion or $2 billion?
Probably even more.
Really? Okay.
Probably even more. Yeah.
Obviously, it depends.
I don't know what it is yet because I haven't seen it really go to work. But I do think it's a massive opportunity.
Yeah, and it's just getting started. But the point is that even the just getting starting phase has been sucked up so quickly into the market. The demand is clearly there for what this is going to do. So you look at these core collateral assets now go into DeFi. I think this changes the game, for XRP holders in a long way. And let me know for you guys listening or watching right now, would you consider doing this? Would you put your assets to work? Because I know a lot of you have just been holding out there. Let me know in the comments down below. Would you deploy your XRP, especially if you could get a 72-hour, buffer on being able to get in and out of something like this and put it to work? Just say yes or no down in the comments. Steven, anything new with Canary? Do you guys have any news you want to kind of drop on the community?
Yeah, there was an announcement earlier this week that we're doing some things in South Korea, so we're pretty excited about that.
When you say some things, what is some things?
Yeah, so it's still early stages, but South Korea is getting close to allowing crypto ETFs. So there was just an announcement from one of our partners yesterday that Hanwha, that we're working with them on various areas like tokenization and ETFs.
Yeah.
But we're going to continue to push in some other jurisdictions that we think that there's a lot of strong opportunity for growth.
I like it. All right, Steven, always fun chatting with you. Thank you so much for coming in today. We appreciate it.
Absolutely. Thanks for having me.
All right. You guys know what to do. Make sure and like and subscribe. We'll catch you next time right here on the XRP Pod. Take care.